So today we are asking very important question to ourselves, that how a country becomes a superpower. According to me, it's the emergence of its commodities and derivatives market. America, we all know, is the greatest superpower in the world economy today. Let us try to understand how it has become a superpower and how the commodity markets have helped it to become a superpower. Let us take example of very essential commodity like crude oil. Have you ever thought that crude oil produced in Middle Eastern countries, Russian countries and consumed all across the globe, but still the price of crude oil is quoted in US dollars? Same example if we take of gold. Gold is produced in South American countries, African countries, consumed in India and China. India consumes 25% of the global consumption and China consumes 25% of the global consumption. But still we have to depend on US for the price discovery of gold, and that too again it happens in US dollars. You are buying your gold from a retailer or you are buying your petrol at a petrol pump in rupees. We have to remit dollars out of India to buy that crude oil and gold. So we are actually at the mercy of somebody else for buying the basic essential commodity like crude oil. We have to ask a very serious questions to ourselves. Why can't we become a price dictator like US? Not only crude oil, gold, silver, copper, any other base metals if you take, US is highly dominating on discovery of the prices. The answer to that question is emergence and development of capital markets and commodity markets. Commodities are very necessary for the growth of any economy. If you are a consuming economy or if you are a producing economy. Being a consuming economy, if you are able to dictate the price of that commodity, gives you a very strategic importance and advantage in the world supremacy. I really appreciate the step taken by the government authorities and the local regulators out here in India of extending the timings of the capital markets and the other derivative exchanges till 12 p.m. in the night, 11:55 p.m. in the night. That is a very welcome step because that increases the liquidity and the market depth of the derivative markets. The price discovery becomes more and more sharper and better. Another very important step that the regulators have taken in this aspect is the FMC and SEBI merger. That there is only one regulator now for the commodity, currencies and the equity markets. So that means the commodity and equity become as a one market now. There is no discrepancy that there are two different regulators, two different exchanges, brokers will have to open two different companies. Everything becomes just one. Also the inception and the commencement of the GIFT City, where international exchanges can be opened in GIFT City, is again a welcome step in this regards. I would like to say that we have to come up with more certain innovative strategies and concepts like these to make sure that the derivative market become more and more liquid, especially the commodity derivative market, because commodities are the backbone of the economy, because India is a consuming economy. For example, if India starts dictating the price of crude oil, India can then keep a check on its inflation, because if crude oil prices go up, the petrol and diesel prices go up. If petrol and diesel prices go up, your transportation prices go up. Having a larger say on crude oil prices gives a larger say on inflation. And if you are able to control the inflation, you can manage your finances better. Today you are earning money, but at the end of the year, you see that you are not being able to save it because the inflation is moving more rapidly than you are growing. It is high time that the Indians think that we should not take the price whatever it is quoted, but we have to work towards it. And emergence of the commodity derivative market is the first step towards it.